In this session, we are going to learn golden rules of accounting. Golden rules for passing financial transactions. First account is personal account. It relates to individual with whom a business deals. An individual can be a businessman or a legal entity, for example, customers, suppliers, vendors, etc. The personal account rule says debit the receiver and credit the giver. The next account is real account. It relates to property which may either come into the business or go from business. For example, cash, goods, machinery, furnitures, and fixtures, equipment. The real account rule says debit what comes into the business and credit what goes out from business. The next account of golden rules is nominal account. The accounts that relates to business expenses, gains, income and losses. For example, rent, salaries, interest, telephone expenses, conveyance, interest on deposits. The nominal account rule says debit all expenses or losses, credit all incomes and gains. Next, identifying and applying the rule. Here is a transaction passed. Deposit rupees 1 lakh in SBI bank account. So, this transaction has passed in two ledgers, that is bank account and cash account. Both bank and cash are real accounts. So, the golden rule is real account debit what comes into the business and credit what goes out from the business. So the entry will be SBI bank account data to cash account. So next transaction is purchase goods worth rupees 50,000 from RAM Limited. This transaction is applied for two ledgers, that is purchase account and RAM Limited account. The purchase account is a nominal account and a RAM Limited account is a personal account. So, applying golden rule for nominal account and personal account are: nominal account rule debit the expenses or losses, personal account credit the giver. So, the entry will be purchase account data to RAM Limited account. And the next transaction, sale of goods worth rupees 5,000 to Nandish Limited. These transactions are passed into two ledgers, sale account and Nandish Limited account. The sale account is a nominal account and the Nandish Limited account is a personal account. The personal account rule says debit the receiver and nominal account rule says credit the income or gains. So the entry will be Nandish Limited account data to sale account. So the next transaction, paid cash rupees 12,000 as rent. Here rent is a nominal account and cash is a real account. Nominal account rule says debit the expenses or losses and the real account rule says credit what goes out from business. So the transaction will be rent account data to cash account. So next transaction, earn rupees 3,000 as interest on SBI bank account. Here interest is a nominal account and SBI bank account is a real account. Real account rule says debit what comes into the business and nominal account rule says credit the income or gains. So the entry will be SBI bank account data to interest received account. All transactions of an entity must be accounted. To account these transactions, the entity must pass journal entries which will then summarize into ledgers. The journal entries are passed on the basis of the golden rules of accounting. To apply these rules, first ascertain the type of account and then apply these rules. Debit what comes in and credit what goes out. Debit the receiver and credit the giver. Debit all expenses and credit all incomes. Thank you.